covering gold today. It is Friday, a day after Valentine's Day. We've been talking about the gold is stuck in a trading range. I don't know. What do you think?
Well, it was stuck in a trading range. It certainly has broken down somewhat and looks like it wants to go a little bit lower from here. So if you're a trader, stay away. If you're a long-term holder, we still are bullish on gold over the long term.
And why are you bullish on gold still over the long term?
Well, when you look at what's occurring around the world with all the central bank buying, the weak growth, and probably more easing ahead, as well as the currency wars, we think that bodes for a weaker dollar, and that makes gold relatively attractive over the next 2 to 3 years.
So this Friday morning, what are you seeing in the gold trade?
Well, so gold is already down somewhat ahead of the tape here, and so it's following its pattern of the week in the last couple of weeks, quite frankly, where it's breaking down and being pushed lower, and that's in part as a response to the relatively strong earnings that you're seeing both in the United States as well as Europe, but the weak overall growth.
And you just mentioned Europe, Oliver. What are you looking at out of Europe? Is this going to have an effect on gold moving forward? Anything going on over there?
Well, I don't know that there's going to be much out of Europe in terms of the economic situation, but certainly the currency wars and all of the additional printing of money from the European Central Bank is going to have a positive long-term impact on gold.
Sure. And a final thing before we let you go, it's been the Lunar New Year holiday break the whole week for most of mainland China. We saw that there were a lot more, there was a lot less volume being traded. What do you suppose this means for this week?
Well, I think that's a short-term impact, and that occurs during the big holidays in Asia, which are where most of the central bank buying is coming from. So that is a natural occurrence and nothing that anybody